Calgary's real estate market is shifting. And as of this month, the whole market in Calgary has actually just gone into a buyer's market. What does this mean? What does it look like? Well, if you want all the details, all the charts, all the information, there is a link in the description or the QR code you can see on the screen. You can scan it and you can get this month's market update report that we put together, I put together, that I want to send to you. So my whole team, my partners, all of this, we've put this information together for you to really help understand what's happening in this market because it's changing. So let's see what's changing. So the benchmark price in Calgary has actually dropped a little bit down to $572,800. And you can see that right here in the green. Now we're sliding down month over month slightly because you can also see we've had higher inventory than we have had in previous years, which is no surprise if you're watching the market. And sales have also been a little bit softer compared to last year as well. We had 3,782 sales this month, which is still decent, but it's a lot lower than what we've seen in past years. But when we look at the actual zones and what's happening around the city, you can see that the north zone is currently sitting at $534,000 and it's dropped 6%. The northeast is sitting at $485,000. This is the benchmark price and it's dropped 8% year over year. East is at 409, dropped 6.5%. Southeast is at 563, dropped 3%. And then we got City Center at $576,000, it dropped 4.4. And the south part of Calgary is at $569,000 and it's dropped 3.7 year over year. And the two zones that are kind of holding the strongest is Northwest at $633,000, only dropping about 2% year over year, and $707,000 in the West, where it's at 2.3% year over year. So you can see that, again, like last month, is pretty much the same. These two zones are kind of holding out a little bit better than the other ones. And some of the biggest losses we have seen are in these three areas right here, the north, northeast, and the east parts of the city. Lots of different reasons for that. But if you are in those areas and you want to discuss and you're trying to figure out what's happening, you're trying to make a move, you want to buy, you want to sell, you want to do both, you got to know what's happening in these areas and specifically in your neighborhoods because that makes a big, big difference. Now, if we look at the number of new listings that came on the city over the last month, we saw 3,782 new listings come on. Now, it's higher than last month. And it's very similar to what we saw in July, and it's less than what we saw at the late spring. But here's the funny thing. There is a feeling when I've talked to my partners, my wife Rebecca, who is an incredible agent on our team, and some of the other senior partners on our team who are in doing transactions, because I'm not actively doing transactions all the time. And for them, I get a lot of insights from what I'm learning from them. And so the thing that they told me this month that I thought was very interesting is that they didn't think that there was a big uptick in new listings. They thought that there would have been more. There's people who are delaying putting it on. So this is what I think could end up happening as we move forward in the coming months. We could actually see some higher numbers like there, right? So it's higher than what we've seen in years past, and we could end up seeing higher numbers. And it might be something like that. It might be a little bit higher, a little lower. I have no idea, truly. But at the end of the day, this is what we could probably end up seeing. We're gonna see more listings come on the market. And that's going to impact the number of sales and the number of inventory. Actually, let's look at inventory first. Because if we look at currently, we had 6,916 listings. We still have not broken past that 7,000 mark. Now, could we do that in October? Possibly. Because if you end up having more listings coming on the market than what we've seen in years past, and 2024 is this yellow line here, it's a very messy chart now, you can end up seeing this number actually in October and maybe November. We could see this move up. Now, if you remember from past videos that we've shot, we've talked a lot about this price or this inventory range, right? Because of the size of our city now If we are seeing 7,500 listings on the market or 7,000 listings on the market, that's where we're probably going to start moving towards into a different type of market, more into the buyer's market, right? Because last month, with sales were down, and they're not the lowest that we've seen. They're sitting at 1,720. They're right in the middle here still. So most likely, we're probably going to be in this range throughout the rest of the year. We're probably not going to see the drop at the bottom. I would be nervous if this was down here. Like we only saw like 1,200 sales in a month, where it's the lowest, because not here, but inventory, right? We're seeing some of the highest new listings per month, but it's actually keeping, sorry, I'm all over there. Here we go. But it's actually keeping the total inventory not at the highest that we've seen. Now that could shift for sure. However, that also depends on the number of sales. I'm jumping all over. I hope that makes sense because it's kind of all over the place. But what has happened is when we've hit roughly 7,000 listings now on the market, we have broken through that balanced market for the whole city, and we are now sitting at 4.02 months of inventory in Calgary as of right now. So what does that mean? Well, there's lots of things that are happening, and let me kind of break it down by zones, by the property types, so you can understand it a little bit. So months of inventory for the zones. So if we start over here, city center, again, you want to have your 90-day versus your 30-day, right? So if the 30-day is higher than the 90-day, that means it's trending up or it's trending down. Now, all of these are trending up. There isn't a single zone in the city that is trending down, meaning like into more of a seller's market or a balanced market versus it going up. So if you want to look, 2.5 months is probably right about here. Let's do as straight of a line as we can. 4 months is here. So these are the areas. So in here, balanced, buyers, and seller type market, right? Who benefits a little bit more than the other ones. And so as you can see, the 90-day is a little bit more stable compared to the 30, because the 30 will fluctuate much more and the 90 is a little more stable. And so the 90-day zones that are in a buyer's market are your city center and the Northeast. Now the ones that are actually everything else is sitting in a balanced market. From the east, the north, the west, or northwest, I should say, south, southeast, and the west. But they're all trending up. The two that are moving, let's use a new color, into the buyer's market is your northwest and your north. These two 30-day numbers are trending more into that, where they're at 4.3 and 4.04. So again, these are all product types, apartments, townhomes, everything in these zones. Now, if you want to see kind of the flow of the chart based on the different property types, you can see quite quickly this green line is very much prominent, and that is your apartments. If you guessed that, you win. But let's break it down. The apartments themselves, they're actually sitting at 4.99 months of inventory for the whole city for all apartments. Now, if you are comparing and you're buying into an apartment right now, there's something you want to do that's very, very, very important. Do not compare this complex to another complex in the same neighborhood. This is very important because there could be run completely differently. Could have different boards, could have different condo fees, all these different things. You have to look at what's equal. And when you're comparing units, so Rebecca just had someone she was talking to for quite a bit for a condo they were selling, and he kept looking at the square footage of his unit compared to the square footage of another unit. Well, square feet is not actually the best thing you should look at. What you should look at, and what she advised him to do, was to actually look at unit factors. Unit factors are equal parcels of units inside of a building. So if you have, making this up, you have 78 unit factors in your unit and you're trying to sell or buy and you're trying to compare to another unit that sold previously, let's say, if it had 82 unit factors, well, that's a bigger unit than you. if it had also had 78 unit factors, it's the same size. Regardless of the measured square footage, unit factors are really, really important in condo complexes. That also goes with townhomes and row homes too. So keep that in mind when you're trying to figure out what the market's doing, and we want to help you with that. So if you are in the market trying to figure that out, just reach out to us, contact me, put in the description, whatever, or in the comments, but we want to help you guys figure out exactly what to do in the market when you're doing this. And this is the type of stuff our whole team uses to make it work for you. So townhomes, you can see it's hanging out in the balance market area. So townhomes are sitting at 3.62 months of inventory right now. And so they have definitely gone up, right, compared to last month. But they're still sitting in a balanced market. Semi-detached, this one, I was very surprised because that number last month was a lot lower and it was in a seller's market. And this month it jumped 3.96 months of inventory. If you like to round up, that is 4, and what does 4 mean? A buyer's market. So the semi-detached properties in the city jumped the whole balanced market and went straight into a buyer's market. So what this says to me is that our market is shifting quickly. Now, there's a lot of you in the comments where I was like, it's gonna go down 60%, it's gonna happen quickly, and hold your hats, because it's like, we're not gonna burn. And I'm gonna show you some reasons for that in a moment. But detached homes, they also have increased, still in a balanced market, and they're sitting at 3.73 months of inventory. Now, again, we could see these product types all move into a buyer's market. That's not the end of the world. It shifts how the market is. You have to, if you're selling your property in a buyer's market, you have to know what's happening. There has been neighborhoods where Rebecca pulled some data for a client, I think it was for last year compared to this year, and she saw it go from 1.5 months of inventory last year to 5.5 this year. It doesn't matter the neighborhood, and that price point, but it was just like shocking. It really, really shifted. So that just changes how you market a home, how you adjust things, your pricing of the home, what to expect. All of those things really, really shift very, very quickly when you see a market shift like this. Now stick to the end because I have some interesting stats that are all about the migration, what's happening in the country that's gonna impact Calgary come spring 2026. Now, if we wanna look at the percentage of off-market properties, this is something we're always now kind of talking about because it's really, really important. Last month, we were sitting at 87% of the homes that went off the market compared to the homes that actually sold. So the 3,700 or whatever sales, there was 88% of properties went off the market and couldn't sell. And now we're at 88%. So we're still really high. Like, we saw a high number that was December 2024, and that kind of is expected because a lot of things could like have a December 31st off market date, you know what I mean? And then just go off. Anyways, like you can see a peak here too, and that's also Christmas. But this is high. This is high. So what that says to me still is we still have sellers out there who are just unrealistic, out of touch. They want last year's prices, and I'm sorry, but you're just not gonna get it. It doesn't matter. The market doesn't care. And I know you may be like, I missed the boat, and you might have. And that's the problem. Like, we just did a video on for the mayoral election that came out. And in that video, if you haven't watched it, I'll put the link up here. But in that video, we talked about how the market is shifting. And for those of you who have missed the market, needed to sell at a certain price, and now you're gonna rent your properties out, the market has shifted a lot in terms of the rental market that you're gonna walk into. So go watch that video if you haven't already, because we talk about that and how that's impacting the market. Now, if we looked at stuff that's gone off market, what zones are we seeing? Well, again, the Northeast, 166%. So I don't know, how do you even figure that out? If there's 10 homes that sold, there's 16 that went off the market. There's more, way more. In the city center, 110. The North Zone, I think that says 120 something percent, and the Northwest is 110%. Now, when it comes to the property types of off market, you can see 125% are for apartments, detached homes. So 856 sales, and was it maybe 899, 889, something like that, off market, where there's 2,800 actives right now. And full duplex, I don't count those, 95% of townhomes. So that looks like 300 each roughly, and 75% of semi-detached properties. So you can just see like this market is there's a lot of people still who are just trying to ask a certain price, with, unfortunately, a lot of agents in our city have not experienced a shifting market. They haven't. They may have been selling for 4 or 5 years, but they have never seen a market that we're walking into. We have. We've been around for 21, 22 years. We've seen these shifts, these flows, and you have to, as an agent, adjust and change how you do your marketing, your pricing, your strategy. All of these things are very, very different right now than they were before. And we're still seeing results for our clients where a lot of agents are not. And we're getting those calls saying, hey, I've been trying for a couple months with someone else and it's not working. What can you guys do? So we are willing to have those conversations, be your plan B, totally. But let's figure it out. And we're not gonna step on toes. We're not gonna take anything if we can't give you advice if you're in a contract. So please do your due diligence. If you're making a change, you need to terminate your contract before you talk to another agent. That's how it needs to work. These are the stats for Canada and what's happening. So Bank of Canada adjusted their interest rates. And this is from one group that I saw where they're expecting another rate drop probably in January. So we probably won't see one in the next 2 meetings, but in the January one, we'll probably see another one. So just a heads up for those that it matters. Now this one I found very interesting. The market balance is tightening in most metros. So this is looking at, now let me give a little bit of context here. Calgary itself and Edmonton too are now on the national playlist, okay? Those people who are moving into our country may not be able to afford Vancouver, Toronto, and now they're looking at Calgary, and you are watching the videos. I'm talking to you. I'm talking to someone from Switzerland tomorrow, right? So we are talking to you guys. Our team is talking to you that are moving from other provinces, other countries, and Calgary is now an option. So what does that mean? That means that we now need to kind of understand what's happening across the country, not just in our city anymore. And if areas like Ontario and BC, their major metros, are now tightening, meaning they aren't as bad as they used to be, and they're not as far into a buyer's market. They're coming down and they're coming more into a balance. Maybe not, they're not there. I'm not saying that's the number, but I'm just saying they're moving in that direction from a high buyers into more of a balanced seller's market. That's going to affect us because literally today, we sent out some emails and we sent up some questions to those that are in our newsletter list. And I think I literally saw 3 or 4 people in 20-minute time frame respond and say, yeah, we still need to sell our property in XYZ. Now that's usually GTA or Vancouver. And once they sell, they're gonna move here. And that's the interesting part right now, because as you see this slide down for Vancouver, GTA is lower. So this is August, and then January is Little Diamond. A lot of these areas are lower than what they were in August, except Calgary and Edmonton. So what does that mean? We're probably going to switch too. If these stay that way over the coming months into Christmas, let's say, come springtime, we're probably going to see Calgary and Edmonton's also shift as well. So there's hope. If you're a seller and you're hoping for prices not to slide as much, that's probably what's going to happen. If you're a buyer and you're waiting for everything to fall apart in our market, that's probably not going to happen, because there was a study done by Bank of Canada that said there is a record number of people who are saying they are planning on moving in 2026, next year, where we haven't seen that high of a percentage. So now there could be, whether this is true or not, or comes into fruition or not, at the end of this the chart, it easily shows that there are more people planning on moving. And now more people are aware of Calgary. They talked about Calgary. They've heard about Calgary. We could continue to see more people moving into our city. And if you like these kind of stats, you want more, grab the QR code, the description for the market report for this month, and we'll also see you up in this video.